Welcome to part 2 of our point and figure workshop. My name is Bruce Fraser, and I am conducting this workshop using the point and figure Wyckoff methodology, primarily focusing on the law of cause and effect. We are going to circle back into studying accumulation, and if we have time, some distribution, and within the concepts of cause and effect. Point figure counting produces a count that leads to a price objective. The count itself is the building of a cause. As a matter of fact, I'm going to talk more about this in ChartCon. For now, we're just going to suggest that you go back and maybe read some of the blogs, especially about cause and effect and about point figure, and familiarize yourself with that concept. But the thing that I want to do right now before we go on to some case studies is I want to look at the point and figure engine. So what you can see here is I put up a point and figure chart of Coca-Cola. And so here you can see that we have a 3-box reversal chart with traditional scaling, and we use daily data. And what I'm going to do is I'm going to show you how you can adjust this chart with the point figure engine and make it look differently from where it is. But look at time here. This goes all the way back to 2002, and so we can see that this chart, 3-box reversal, and this is simply because Coca-Cola really is a non-volatile blue chip type stock. The interesting thing here is that if you take this count from here over to here, I'm not going to do this today, but you take this count and you take it from the low, it actually counts up to like $43, somewhere in this area right here. So this count did a really nice job of picking up the move, and this move may not be over. So you can see that it's just right at the prior highs. But what I want to do is just take a minute and let's just change some of these attributes and see if we can make a slightly different chart that is useful in different ways. So let's start by making a 1-box reversal, and you're going to see a different look. And now we have a point figure that goes back to 2013. And this, we would have to go back and look at a vertical bar chart, a daily vertical bar chart, back to the beginning of 2018, but this has attributes of accumulation. We want to confirm this with the vertical chart. Now, we don't want to see trend lines. So we may draw our own trend lines, but we don't want to use the automatic ones. So we're going to update this. So turn off the trend lines. And just for fun, let's just count this. So we see here the scaling is 1-box scaling. Everything over $20 is 1-point scaling. Everything under $20 is half-point scaling. So let's just count this for fun. We're going to count from here to here. And so we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we have 10 across, and we count 10 from 42 and add that to the low at 42, and that takes us to 52. And now on the count line, which is 1 point higher, we count again 10 across, and we have a count of 52, 53. And so this would be incredibly useful, valuable information to a swing trader who's trading Coca-Cola. And so the other thing that we can do here is we can change our scaling method. Now, there's primarily 3 scaling methods that we're going to be using: traditional, dynamic ATR, and user defined. Dynamic ATR is allowing the computer to calculate the appropriate volatility for Coca-Cola. Now, we said that Coca-Cola was a non-volatile stock, tends to not have a lot of volatility. So the ATR is going to calculate its implied volatility, which it comes up with a 52-cent scale so all of these are 52 cents above the prior. And so now when we take a count on the 1 point, we count across here. Remember, we had 10. We'll see what we get here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 16, 17, 18, 19. Let's call it 20. Well, remember how we had 20? We had 10 points across. This is an important concept in point figure. So we have 20. It's one box reversal. So it's 20 times one box reversal times 52 cents. And so we get a 20 times 52 times 1. That's 10.4 point objective across here. So 10.4, and we add that to 4160. So we can see that this takes us exactly to the same count that we got with using the one box reversal and counting across. And this is what should happen. And so we add 1040 to 4160, and we get 52. And that's exactly what we had before. Now, this is the concept I want you to get from this. And that is that point and figure is variable, it's malleable, we can use it in different ways. So here we took and changed the scaling and we got the same result. This is what should happen is that if you go to a finer, the scaling, if you go to a finer scaling, which in this case is 52 cents, then you're going to get more columns. And that's exactly what happens is that the volatility shows up. You can see you have much more detail here than you did before. So you have this great detail, 20 columns. Well, this should pretty much work out every time. If you change the scaling, you're going to get a different number of columns of count, and they should pretty much line up. And this makes point and figure very robust, and it gives us confidence because now we have a system that works under different conditions and gives us the same results, more or less. There can be a little variability here. Okay, so now that's one box. So now let's do 3 box just to see what we get. So all we do is on the reversal box, we change it from 1 to 3, and oh, now we have a different set of conditions. And so we can see here that we have much more data for to work with in a different way because we have 3 box reversal method. And so these are the things that we're able to do with point and figure in this, really good charting engine that StockCharts has created for us. And we're very fortunate to have this. And so the other thing that we can do is, let's say that we see that the dynamic scaling is 0.52 in this case. We want to clean it up. We want to clean up the scaling here. So let's change the scaling from 0.52, let's change it to 0.50. And so here we do that by going into the box size area, and we just put in 0.50 or 0.5, and we put that in, and now look at the scaling. The scaling is a 50-cent interval between each. And so that sort of cleans things up. And so oftentimes what I will do is I will go to dynamic ATR, and then let's put in a different stock. Let's put in Boeing. So we're going to put in Boeing. And so now Boeing is suggesting for its price and volatility a $7 box size. And so what we're going to do is, it's not 7 even, it's 6.95. So what we're going to do is we're going to change this using user defined. We're going to change this from 6.95, we're going to change it to even $5. And because of our point figure is a robust charting methodology, cleans up our scaling and gives us counts that we can work with. And so look at that remarkable, we call this a catapult wall. Let me shrink this down so you can see it. And so look at this, look how big this is. It goes from 100, 5-box method. There's not a single reversal from 100 all the way up to 345. That's an 5. There was no correction on the 3-point reversal method that went back more than $15. 3 boxes times 5. So all the way up to 345. That's just a remarkable chart. Okay, so anyway, I just want to show you different ways you can use the tools here. And let's see if there's anything else that we want to address. You can go back in time. You can go back into time and look at historical charts. If you have a subscription, everybody should have a subscription to StockCharts just for the point and figure engine. And so you can go back and pick up historical periods by changing the end date. And that's a very cool thing. The other thing that you can do is you can change from end date on duration to fill the chart. Let's see what we get. And so in this case, it doesn't change things much, but you can end up with more data. Maybe let's go look at General Motors. So it's not happy with a 5-point scaling. So this is something that you'll find happen. So let's do this. Let's just go to dynamic ATR, 5-point scaling. And look at all this detail that we get. Box size is 88 cents. 3-box reversal, ATR 20, 88 cents. You might want to change that to 75 cents, even it out, or something akin to that. But look at this. This looks like a really good count in here that we could go look at a vertical chart. I'll often do that. I'll look at the point and figure chart and I'll go, ooh, that looks really good. Let's go back and look at the vertical chart and see if this looks like classic accumulation. Now notice this. Look at how it jumps up, pulls back. This is a backup, which is a form of a last point of support, and then it jumps out, and then look at it comes back to the area of the breakout right here at 34.32, touches that, and then starts to rally again. So that's really interesting. And it continues to be in a big trading range there. Okay, so let's get back to work. I've got to stop goofing off. Okay, so here we go. And so here we have Walt Disney Company, and we have a daily chart, and we can see here the vertical analysis on our daily vertical bar chart. And so we're seeing selling climax, a lot of volume, selling climax, automatic rally. We draw support, resistance, and then we can see that there is an attempt to come down to the support area. There's an attempt to drive through support, but there's no follow through. And here's this beautiful test. Look at this big tail here as it comes down and tests this early April low, and then a really nice bullish bar. There was a good bullish bar here, but it didn't get very far. It came back down, had one more test. This looks really compelling right here. And then there's a much better rally. We would call this a minor sign of strength. And then it comes back into a last point of support, which is higher than either of these two lows. It turns off of that and comes back up through the support area on a really big bar. So we're going to talk all about this tactics for these areas in ChartCon, but you can see a last point of support and then a big change of character with a run right up to the resistance area, attempt to come back. It can not come back to the support area, creates another last point of support, and then look, it's up and out. And so we want to take a point figure count of this and see how much fuel's in the tank on this daily chart. And so with that, let's do one other thing. Is I made a 1-box reversal point and figure chart, and here you can see that, and I have a better chart to show you, but what I've done is I've attempted to line up the columns of the point and figure chart, which is hard to do because remember, this is all a function of volatility, not of time. And so they're not going to line up perfectly. But because this is a daily chart, we're going to default in our minds to a 1-box reversal chart to capture this area. And so we see here that here's the second LPS here. Here's the first LPS. Here's the 2 tests of below the support area where it holds and turns back up. Here's the climax. We count from right to left. So let's now move on. And so here you can see that I put a few different counts. Look at how well this is working out. So this blue count is a minor accumulation area. Look at our method, reversal, oh, user defined. The reversal method is 1 and the box size is 1. Well, that's traditional. That's what the normal traditional method will do. Will give you 1 box under 100. And so the reversal is 1 because we're working with daily data. Well, here's the problem. The problem is that when you get over 100, the scaling changes to 2. And so 2-point scaling on the traditional method, that presents a problem for us. And so what we want to be able to do is be able to count this. So we're going to, in this case, we're going to set our own parameters, user defined, and we're going to set the box size as standard 1 box throughout. And what that does is it allows us to count across 2 scaling areas. If we had part of the plot over at $2 and part of the plot at $1, we try to count that, we're going to get a count that's not going to be good. It's not going to work. And so we can fix that a couple of different ways. One of them is to set the scaling standard. The other one is to use ATR scaling because that standardizes the box size to the volatility. So here we can see this is an accumulation area, small, 18 columns. So we're counting 18 times 1 box reversal times 1 times 1 point. 18 times 1 times 1. So we have a count of 18. We'll look at, we had a rally that went up and we missed the count, the conservative count, by 1 box. So this was, it went to 113. Disney actually went to 112. And now we have a little distribution area here, which is 12 columns. And this distribution area, which is really important to us, there's a little nuance that I want you to learn here. And that is, we count across, we have a count of 12, 12 times 1 times 1. So 112 minus a 12 point distribution area takes us to 100 right here. And then from the count line, which is here, this is the last rally up before breaking down. From this count line at 109, it takes us down to 97. And so we have a range here. Well, look what happens. The selling climax comes at 100, and the low, these 2 test areas, come at 97. And so this is the range of the area of the low of this accumulation structure. And so this gives us confidence because this says, look what's happening. It's gone down, it's fulfilled the distribution count, and now we're getting an accumulation structure that appears to be giving us higher prices, potential for higher prices, and it's a much bigger structure. And so in this particular case, we have 36 columns across times 1 times 1. So for our swing trading campaign, a small campaign using daily data, daily vertical, and daily point and figure, we have 36 points of potential here. We take it from the count line, we take it from the low, across here, you can see we had a backup to the LPS after a sign of strength. These are our counting rules. After a sign of strength, you look for a last point of support. And once the last point of support is in, you count across to the area of the selling climax. You count this across, which is exactly what we did. We had 36, gave us a count of 133, 139. And as of this chart, which I think I made yesterday, it's at 115.94, or call it 116, which is exactly where this entry is, right here. So there's still potential for more count to come. So this is a way for us to use point and figure for our swing trading opportunities. So daily data, 1 box reversal using user-defined data, And this is what we have. And 2 prior counts that both worked really well. And so it gives us confidence. Also, the other thing that gives us confidence is we have a distribution count, and Disney was stopped in the area of that and built an accumulation structure. Okay, let's move on. Now, let's go out into a bigger time frame with Disney, and let's look at this in a bigger time frame. So we have weekly data. This is a reaccumulation. So we call it a reaccumulation because after a long uptrend, and if you go back into my early blogs, I actually analyzed this uptrend and this climactic surge, which produced an automatic reaction and made the case for a range-bound market in Disney. And this is in 2015. Well, look where we are. We've been range-bound ever since, but look at what this structure appears to be doing. It's building an accumulation count, and the accumulation count or accumulation across here, you can see an automatic reaction, and then a secondary test, another secondary test, and look at higher lows. Starting here, these are all higher lows across here. And so we, after a minor sign of strength, we have an LPS. So this in and of itself would be an indication of the completion of accumulation. We're always on the lookout for a second LPS. So we have another attempt to rally. We come back to another higher low. This area that we just evaluated on the daily chart is this little area right here. So we picked this up and we got a count out of this that took us up to what, 133, 139, and we're at 115.94 right now, which look where it puts us. It puts us right at the resistance area. So what would be really interesting would be to see this jump out of here and then back up or pause without coming back in. It may come back in and then keep going. But here's the thing. We have a bigger count to take here. So this is a little trading count, but and this is the reason we always want to look at the bigger time periods, is now we have the potential for a really big count. So how big is this? So here's the weekly data. So what we're doing is we're looking at this whole area across back into the middle of 2015. And so here we can see that we've zoomed in. And so we have our basic counts. Here's our phases: phase A, phase B. Phase B is where you build most of your point and figure count, is in phase B. A lot of volatility, lots of swings. And then phase C is where you have your final testing pullback. That's the last place that support is met. That's why last point of support before it turns up. And you can see here that there's a hint of strength here with volume. And then it comes back and tests and has a really big bar, really good volume here, and another backup. Well, these are actionable places to start to put trades on. And so this could have been a really good place to put a trade on too. You can see this is a really nice bar. And if you'd set stops below here, they would not have been hit here. But what we really wanted to do is we want to now look at the point and figure chart. Okay, and compare the point and figure chart. Okay, so here, what I've done is I've put the labeling that you just saw, and I aligned, and this is a really good idea for you to do, is I put the labeling on the chart, and this is, again, this is a user-defined 3-box reversal, and what I did is I made the box size 1.5, because we have the problem we did before, which is that this transcends the $100 range where the scales change. And we want to be able to take accurate counts of this area. So we want a constant scaling. So we can see buying climax, automatic reaction. We set resistance here at 116 and support we set at 87. This is the area of the range of our potential reaccumulation. And so we can see here, okay, so we have, this is a good thing to do, which is, just print the chart out and then just with a pen, take your labeling off your vertical chart and put it on the point and figure. The thing is about the point and figure charts on StockCharts is that you don't have the annotation feature. So you have the ability to annotate your vertical charts with StockCharts, and it's a wonderful annotation tool. The point and figure charts, you can't do it. So what you have to do is copy and paste it into PowerPoint and annotate there, which is what I did with this chart, or print it off and then just write on it. And actually, you print a big chart, and then you could even keep plotting the point and figure by hand, which is a wonderful thing to do. And you will learn a lot by annotating or plotting your own point and figures. So now let's go to the next chart. Oh, so we put our counts in. And so we are identifying 3 segments. And so we don't want to just take the biggest count. We want to take segments. So we have segment 1, and you can see that there's a tremendous amount of volatility downward here in segment 1. And so we want to count from the low of the LPS to the low of the first segment. And then you can see that there's another big supply surge downward here. And this constitutes our second segment. And then we have our third segment here. And so we're going to take 3 counts. We have 11 columns, 21 columns, 30 columns, times 3 box reversal, times 1.5 point scale. And look what we have. These are our objectives: 145.5, 147, 178, 192, and then 219, 232.5. Now we would take this in bites. We would look for a campaign to here. We may continue to own the stock as long as it's acting well, and it could. We don't take the point and figure counts as the final objective. Whenever we hit a point and figure count objective, we stop, look, and listen. We don't necessarily act. We look for the evidence of a cause being built, either to produce new reaccumulation or new distribution. And so we're always using the tape, evaluating the stock based on its action on the vertical. Okay, so now what I want to do, we only have a little bit of time left. So here you can look at the Wyckoff intraday workshop. Maybe I can do another point figure. If you enjoyed this, I can do another one of these. But what I'd like to do, and let me know if you enjoy doing these workshops. We certainly can do more on point and figure, and we can do other things too. In the interim, if you want to learn more about point and figure, we have a video course that Roman Bogomazov and I did. And it's 3 different course periods together, covering different material. And I think it's like 7 hours of discussion or education on point and figure analysis, how to take projections, nuances, and things like that. Roman has reduced the price. So they are going to reduce it from $299 down to $199. And so this is good through September 6th. And so if you really want to dig deep into point and figure analysis, this is a great way to do it, and quite inexpensive. And then finally, upcoming events we have, and you can go to Wyckoff Analytics to see. I'm going to be the host of Best of Wyckoff this year. It's quite an honor to do that. It's going to be on September 1st, judging the market by its own action. And then on Wednesdays, we do a Wyckoff market discussion. We have a free one coming up on September 5th, and you can go to Wyckoff Analytics to see those. And then lastly, I want to say thank you for coming. Let me know if you'd like to do more of these kinds of things, and tune in and see Roman and I doing power charting on StockCharts TV, which appears initially at 3 p.m. and on Fridays, and then as shown after that on repeats over the weekend and so on. So anyway, thank you so much for being with me. I hope that you found this to be educational and informative, and I will see you next time. Thank you.